I don't think a stock market crash is coming, but all right, welcome to Talking Investing. Today, the S&P 500 hit an all-time high. So as always, this is not financial advice. We're here to talk about all things investing. So today, we're really going to talk big picture for starters, and then I am going to end up looking at a few stocks. Let's take a look at the S&P 500. So it's nearing the end of the trading day. It's at $4,583.42. If you look at today's range, you'll see that it hit $4,598.53. That is its 52-week high, and that is also its all-time high. The S&P 500, which is probably the broadest measure of the overall stock market, is at an all-time high. Having said that, a lot of you might know that a lot of your stocks are nowhere near their all-time high. We'll take a quick look at the Nasdaq, and you'll see that today's high was $15,384. The all-time high, the 52-week high, as well as the all-time high for the Nasdaq, is $15,403.44. So we're about 1/4 of a point away from the all-time high for the Nasdaq as well. So far we have the S&P, which hit its all-time high today, and the Nasdaq, which missed it by about 1/4% today. Then we have the Russell 2000. The Russell 2000 is made up of small cap stocks. So there's a Russell 2000 and a Russell 1000. Put together, they make up the Russell 3000. The Russell 1000 is the bigger, larger cap stocks, and the Russell 2000 is the smaller cap, growth type stocks. This is the main index that I look at. Most of what the retail traders trade, myself included, falls into the realm of the Russell 2000. Although they may not actually be listed on the Russell 2000, they tend to be smaller cap, high growth type stocks where there's a lot of risk reward. The Russell 2000 is not at its all-time high. It's at $2,305. Its all-time high is $2,360. So that's only about 2.5% off of its all-time high. But when we go to the charts, you're going to see there's a big difference. These indices parted ways at one point during the year, and they've headed in different directions. And that's what I want to talk about, and that's where I think there's a few opportunities. So this is the S&P 500 over the last few years, and you'll see here we are today. This green line represents today's value, and you'll see that that is the all-time high. And this has gone up 26 or 27%. In this current bull run that started in March of 2020, so that's coming up on a year and a half ago, is about 108% increase. You may say that's not exactly fair. I think there's one more way you should measure this, and that is in February of 2020, before we entered the new normal. In February of 2020, the S&P 500 had reached its all-time high. So if we measure from there and disregard the giant dip that it had and go till now today's new all-time high, it's about a 35% run up, a little bit less dramatic when you look at it that way, but we're going from all-time high to all-time high. If we look at the Nasdaq, very similar situation here. So if I go from the bottom here on March 20th, that's approximately 133% increase over the last year and a half. In February of 2020, we are up 60%. So over 60% on the Nasdaq since February. So either way you measure this, the Nasdaq is up huge in the last year and a half. Then we have the Russell. So the Russell has acted a little bit differently. So if I measure from the bottom to the top, we're up about 139 or 140%. So in total, that's a big run. Fairly similar to the other two. Then if we measure from our business as usual date back here in February of 2020 to now, that's still a nice, 35% run up. So from that perspective, they may look similar. But what you'll notice here is in February and then again on March, the Russell 2000 peaked. So March 15th was its actual all-time high. We are now a full 7 months later, and we are not back to where we were on March 15th. So I'm going to show you all three of them together, and you'll see that that is very different behavior than the other two indexes. So here's the three indexes side by side, starting at March 15th, which was the date of the all-time high for the Russell 2000. So as we compare that from its all-time high on March 15th, the Russell 2000 is down 2%. In that same period of time, the S&P 500 is up 15%, and the Nasdaq is up 18.5%. There's a very big difference between the way the small cap stocks have acted and the way the larger cap stocks have acted for the last half of year. Since March, it has been rough waters for the growth stocks. The higher risk, the higher reward, the more the stock got beaten up. And many of these stocks are still at or near their all-time lows, even though we just looked at the S&P 500 and the Nasdaq, which are at or near their all-time highs. So I want to look at a few stocks in specific because it actually even gets a lot worse than this. So this is about a 20-point spread between the small cap Russell stocks and the overall market and larger cap stocks in the S&P 500 and the Nasdaq. But I'm going to pick a few stocks that I have followed and show you a picture that's even more dramatic than this. So this stock is SKLZ. I've done one or more videos on each of the stocks I'll talk about today. I just tried to stick to the ones I've already covered. Okay, if we look at SKLZ hit its all-time high somewhere in early February of this year. And since then, SKLZ is down 74.75, so almost 75%. While at the same time, the orange line on here represents the Russell 2000, which is up 3%. So we know the Russell 2000 is actually lagging all the other indices, yet SKLZ is even almost 80% worse than that. So this is what I'm talking about. There are a group, I'm going to go through three of them, but there are hundreds of these small cap high growth stocks, that ran up in January and February of this year and then got totally decimated. Now, not all of these are going to recover. And I want to show you one other thing about this stock because it's down 75% right now. And if I zoom in, you'll see that over the last 2 weeks, the stock is up 37%. So it just had a huge run up in the last 2 weeks. It's still close to 80% behind what the Russell 2000 has done in that same period of time. So this is a very small company. This is a high risk, high reward. So, you got to judge for yourself. But in my estimation, this was wildly undervalued. And, I have price targets. You'll see a couple of purple lines. My personal price target for this is $22. Now, you'll see this was actually at $46 this year. So a price target of $22 is pretty modest. Even after the 37% run up it just took, it can take another 93% run just to get to that price target, which is just my personal price target. Again, I don't have a crystal ball, so that's just the way I crunch the numbers. Okay, let's take a look at the next one, the Tattooed Chef. So if you guys watch the channel, you've seen I've done several Tattooed Chef videos. I just did one recently. You can check that one out if you want to get some more details about exactly who and what the Tattooed Chef is. This is another stock that I believe is very undervalued. So you'll see from its all-time high back in January of 2021, the Tattooed Chef is down about 30%. And in that same time, the Russell 2000 is up almost 9%. So that's close to a 40% split between the behavior of the Russell 2000 and the Tattooed Chef. And remember, my whole original point of this is the Russell 2000 has lagged behind the entire stock market. So now we're looking at stocks that lagged dramatically behind the Russell 2000, which lagged behind the overall market in general. So these are truly the beaten down stocks. So again, you've got to do your research and you've got to believe in these companies to hold these stocks. I'm pointing out a few examples. There are hundreds of stocks out there like this. Not all of them, in my opinion, are worth investing in, but I have found several that I think are worth investing, and I continue to look for more. I'm going to go through just one more. So this stock is Workhorse. I've done a few videos on these guys as well. So if you want to learn more about what Workhorse is, I've done 2 or 3 videos, and they're pretty in-depth dives. And these guys do a lot of interesting stuff. Again, this is another high risk reward stock, but this stock is down from its highs back in February. It's down 83% right now. Essentially, this stock has been left for dead. 83% reduction in your stock price means the market assumes it's much more likely you're going out of business than surviving. So this is a company I like. I like what they're doing. I think they're going to solve their problem. But again, I don't know. This isn't financial advice. You guys have to decide for yourselves. But what I do want to show you on this is that, this is 86 or 87% underperforming the Russell 2000. And for those of you who are wondering, I don't look at the Dow. It's 30 stocks. I don't invest in any of those 30 stocks. For what I do, it's not a very good index or measure of how things are going. So because of the size of the S&P 500 being 500 stocks and the Nasdaq being comprised of 100 stocks, to me, those are better overall. Those are better indicators of what the market is doing. And then obviously the Russell 2000 is 2,000 small cap stocks. So for that reason, I don't really look at the Dow. So to wrap up, it seems to me that the market is peaking. I don't predict market crashes or corrections. I will say they are a natural event, particularly a market correction being a 10% pullback is very natural and normal. So maybe we are due for one of those, maybe not. I've been hearing that talk all year this year, and it has not happened. So will it happen someday? Most likely. I don't think a stock market crash is coming, but nobody ever thinks a crash is coming until it comes. So I don't know about any of that. What I am seeing is that in the meantime, even inside of this market that has run up so much, there are a lot of stocks that have been left behind that I believe money is going to start rotating back into. So these are the opportunities that I'm looking for. These are the kind of small cap, high growth stocks that I go through on the channel. So if you guys like this stuff and you want to see more, please do me a favor, subscribe to the channel, smash the like button, and thanks so much for watching. I will see you in the next video.